Let's talk about the Air New Zealand rights offer. Now, there seems to be a ton of confusion on how to actually buy the Air New Zealand shares using the rights offer. So in this video, I'm going to try to explain a little bit from what I understand on how to buy the offer and how to use the rights to actually purchase the shares. And I'm also going to talk about some of the implications of all of this. First of all, I guess the most important part is that you have to realize that the offer and purchasing of the shares are two separate things. So first of all, you have the offer itself, which has the symbol on the exchange as AIRRG, which is the right to buy the share at a certain price. And then you have AIR, which is the shares. And they're two completely different things traded on the exchange. One right allows you to buy two shares at a certain price. You can think of having a right as having coupons to an Air New Zealand restaurant, where you can buy two Air New Zealand steaks for 53 cents each. Now, even with the coupon, you still need to pay for the steak itself, which in this case is the Air New Zealand share. Now, you can still purchase the metaphorical Air New Zealand steak for full price from the exchange. Even if you don't have the coupon, it'll just be more expensive. What's interesting is that these rights are also still tradable. So you can sell your rights, or you can think of them as coupons again, to other people that want to buy the Air New Zealand steak at a lower than market value price. So let's look at a few different scenarios. In scenario A, you are a Air New Zealand shareholder before the 1st of April. So for each Air New Zealand share, you will get one right, which is again basically a coupon to buy two shares at 53 cents each. Now, Air New Zealand has given a reference of 49 cents for each right. And as we know, each right allows you to buy two shares. So if we add the costs together of these two, the total reference cost for one Air New Zealand share using the rights would be half the price of the rights that you can buy on the exchange, because each right allows you to buy two shares, which is 24.5 cents plus the 53 cents to actually purchase the share. So the total would be 77.5 cents. And this is the reference price that Air New Zealand gave. If you are a shareholder and got given the rights, but you don't want to buy any new shares, you can sell the rights for a profit to others that do want to buy the shares. And I will tell you why this is bad later on. Okay, now in scenario B, you are not a current shareholder of Air New Zealand, but you want to get in on the offer. So you can go and buy the rights of the exchange. So it's got the symbol AIRRG, which are the symbol for the rights. Now remember, rights are basically coupons. And then you can buy two shares of Air New Zealand at 53 cents each after you have the rights. But of course, you still need to pay for the shares as well. So you need to buy the rights and then pay for the shares. Trading of this rights coupon closes on the 26th of April. And if you're wanting to use the rights or coupon to buy the shares, you have until 1st of May before the rights expire. So now I'm going to talk about why I think all of this is problematic. Well, first of all, it's very confusing to say the least. There's so many numbers that's being thrown around, and I think they are mainly designed to confuse people. This has been the go-to trick for financial institutions to throw a bunch of numbers and jargons to try confuse people so that people end up paying significantly more than they need. Now, they could have easily made it so that one right allows you to purchase one share instead of two, which would actually make it significantly less confusing for everyone involved. Now, it's also a form of gatekeeping, I'd say, because they don't want normal, everyday people to really understand these concepts so they can keep making money off them. And this is why you should subscribe to this channel, because I'm an everyday person and I don't work for a financial institution. Now, I care about helping people understand some of these concepts and some of the things that are going on, and because I was like everyone else, being misled and confused by these financial institutions all the time until I decided to learn more. So the second problem is that this is pretty much a forced dilution of Air New Zealand shares while they are raising funds. So let's say you are a current shareholder, but you don't actually want to or don't have the money to buy any Air New Zealand shares. You are effectively losing value in your shares because there's like these rights, coupons, going around that's selling shares at a lower price. Therefore, your shares would be worth less, even though nothing has really changed. Analysts have expected the price of Air New Zealand shares to fall between 53 cents and 77.5 cents, which is the reference price, after the shares have been distributed, which would happen in May. Now, this means that the current Air New Zealand share price of around 80 cents or so is still overpriced and has more room to fall. So what I'm expecting, which may or may not happen, but just pure speculation, is that after the May share release date, there'll be a significant amount of short-term selling from existing shareholders that have taken up the offer and are looking for a quick cash out. The new shareholders that have purchased the shares through buying the rights on the exchange will be left holding the bag. Now, Air New Zealand would walk away happy because they would have got money from these new shareholders and fund managers, and don't forget also the government, to fund whatever they need to fund. It's also not sunshine and rainbows if you are an existing shareholder either. Now, unless you put more money in, your shares will be diluted by the new shareholders that have taken the offer. So your shares will be worth less. So basically, it's a lose-lose situation for everyone, apart from Air New Zealand, which would be getting a ton of money from newer investors, a fund manager, and also the government. Now, this is just another way that institutions tries to get money off you.